Thanks, Jerry. Thanks for Vertical Events for the opportunity to present again at Explorers. Not sure if the mining engineers are supposed to talk at Explorers, but I haven't been kicked off yet, so we'll see how we go. Won't talk too much about the rocks here. We've got what is a really exciting opportunity in northern Vietnam to restart the previously operating Ban Phuc nickel mine, and we're going to turn it into a downstream business to convert nickel concentrate into the first stage of the lithium-ion battery, and we're going to deliver a mine-to-consumer product for our downstream partners. So you can see here it's a vertically integrated business model. We can take the nickel in the ground, convert it into that first stage of the battery. With our partners, we can then convert that into a cathode, which is the dominant part of that battery, the lithium-ion battery. It has high nickel in the ratio of NCM 811, so nickel, cobalt, manganese 811 is the product we will be producing from our downstream business. We have a large nickel sulfide resource that we'll be pulling from. So we have a nickel sulfide district. We have 485,000 tonnes of nickel already defined and continuing to explore and looking to expand on that 485,000 tonnes. As you can see there, we're looking to produce 80,000 tonnes per annum of NCM 811, and that has in the order of 40,000 tonnes per annum of nickel. So this is a globally significant downstream nickel business, and it's really based on this partnership model. So I've done many trips to South Korea and to Vietnam as well. So our model is around finding the partners with the balance sheets to fund this and de-risk this for us, and then working with those partners to deliver into the demand that's coming for the lithium-ion battery and the electric vehicle. So you can see here we have the upstream business unit. We own the Ban Phuc nickel mine 90%. We have a local partner, the customer, have been with this asset for over 20 years. This is an asset that has been in the hands of Westerners for over 20 years, but with that local partner there being a very important part of that local team. We've also made some initial investments. We're looking to bring in third-party feedstock from around the world, particularly from areas like Australia and Canada. And so we've made some investments into up-and-coming nickel miners. And so we've got a real strategy around bringing in third-party feed from other jurisdictions, using those partnerships that we've built in South Korea and Vietnam, upgrading it into that NCM 811 product. And you can see there we can produce enough nickel for over 500,000 up towards 750,000 electric vehicles. So it's going to be a large processing facility in Vietnam. And those electric vehicle companies that we're talking to are definitely excited about those sorts of numbers that we can push through this refinery. And it's no surprise that the LME nickel stocks are falling rapidly, and that's really been driven by this movement towards a high nickel cathode for the electric vehicle. You can see there the potential nickel demand coming from the cathode industry is 1.9 million tonnes per annum, and that's almost the entire supply of the existing Class 1 nickel again, so we need to find another 1.9 million tonnes per annum. So that's a big challenge as an industry, and we're doing our best to achieve as much as we can. We're going to sort of push towards 40, but hopefully a little bit more than 40,000 tonnes per annum, but there's a long way to get to 1.9 million tonnes per annum as an industry. So a bit of work to be done there, but I think it's important that we do focus on exploration to achieve this demand. Otherwise there will be a movement away from nickel and into different chemistry mixes, and the real benefit of nickel is that it can be recycled, and that's why we think that nickel will continue to be the dominant chemistry mix, because we can use that nickel time and time again, and the recyclable nature of this means that we think that the nickel cathode will be the dominant chemistry mix over the lithium iron phosphate batteries. So you can see this is our nickel sulfide district. We have the Ban Phuc disseminated. That's a large open pit 450,000 tonnes of nickel in the centre there. That's where the existing concentrator is. We have a number of these other small, high-grade, massive sulfides, the Ban Chang, King Snake, Banquas, and other disseminated. So there's nickel everywhere. It's outcropping. Even I can find it. It's everywhere. It's sort of like going into Campbell 60 years ago. There's nickel everywhere, and we're hitting nickel on every drill hole. And we think that we can be mining here for the next 20 years. So we've got a good 10-year already in that 485,000 tonnes of nickel. We've got about 10-year mine life. With further exploration with success, there's no reason why we're not still mining here for the next 20 years. Oh, well, sorry, I thought we deleted this slide, but apparently I've been too busy, but my share price took a 20% dive yesterday, apparently because of this slide. So what it's saying here is that we were aiming for a mine producing NCM production in 2024. You can see there's a slight delay to mid-2025, so effectively a 6-month delay, and so we're 20% cheaper today, so much better for anyone that isn't a shareholder. You can get in at much better prices than we saw before this slide got put out. But you can see there, it's a process. This is a world-class downstream nickel refinery. They're not easy, and that's how long it takes. So we're very transparent about that. Until now, we hadn't started the bankable study, so we gave out some guidance around 2024 as our goal. Now our goal is mid-2025, so sorry about that. But that's the best we can do. And I'll tell you, my partners in Korea aren't happy with that, but that's the best we can do. So most of the feed will come from this large Ban Phuc. This is the main intrusion of the previously operating mine. So the mine that was previously operated mined a small high-grade vein that was associated with this large intrusion. This is very similar to your Mount Keith style, big bulk tonnage disseminated. You can see there on the cross-section, very low strip ratios and bulk open pit mining. You can see similar grades to Mount Keith on a nickel equivalent, 0.44, 0.43. So you've got your copper, cobalt, platinum group metals as well, which kicks up your nickel equivalent grade. So you can see, this will be our baseload feed, and then we'll top it up with some of these high-grade underground opportunities. So these are massive sulfides, higher grade, smaller, narrow vein underground mines. We've got 3 there, Ban Chang East and West, and the King Snake. So these will bring in some high grade and just top up that the feed grade into the concentrator. We're working with the Vietnam government on this target called CHIM. I've nicknamed it the Big Bertha. It's about 10 kilometres away from Ban Phuc. So you can see Ban Phuc is our flagship asset. It's 450,000 tonnes of nickel. The CHIM target, that's a mag feature, 15 times the size of Ban Phuc. So pretty excited to be working in collaboration with the Vietnam government to hopefully put some holes into this over the coming months. So we're working on reconnaissance soils and geophysics. We're using our geophysics equipment, so we have our own EM and IP gear that we're sharing with the Vietnam government, and then we're working through a process of bringing that into our tenure. And we're hoping to find the mother lode over at CHIM. So if it's anything like Ban Phuc, it'll probably be another big, large, disseminated, large tonnage opportunity, and that's really what we need to secure supply for our downstream business. And this is the reason why we looked at the disseminated ore bodies. Most peers would go chasing the massive sulfides, but they just don't give us the long mine life and the long tenure that is required to bring in these long-term partners in the downstream business. We're talking about groups that need a security of supply over a 10 to 20 year period, and that's why we like the large disseminated ore bodies, and we've also invested in other large-scale opportunities similar to what we're seeing here. So just where we're located in Vietnam, just out to the west of Hanoi, so it's about 5.5 hour drive west of Hanoi. You can see that at that Tan Phu industrial cluster, that's near where we're looking to build the downstream business. which is halfway between the mine and the rail infrastructure. So you can see that the rail infrastructure goes down to the port city of Haiphong, which is where VinFast is located. VinFast is Vietnam's answer to Tesla. Do a bit of research on those guys. They are going to be a major player in the electric vehicle space, and it would not surprise me if we see VinFast cars driving around Australia in the coming years. They are looking at a $60 billion IPO on the NASDAQ. So these startups are getting much better valuations because they don't have the legacy issues associated with those old OEMs that are just literally being left behind by these startups. So VinFast is one of them, and they're getting some great traction and looking likely that we'll probably be a partner with them over time, and we'll be able to bring the nickel in the ground from our Son La province out near the mine site, all the way through to the electric vehicle in country. It's a great story for Vietnam, and it's a great story for VinFast. So this will be some of the cleanest and greenest nickel in the world because we have a hydroelectric power source. We're looking at net zero carbon from day one using electric mining equipment. And we believe this is a great story, not just for Vietnam, but also for the mining industry to be able to drive a product all the way through to that final electric vehicle within so close proximity, driving that net zero carbon outcome. And we're doing it through this technology. It's a pressure oxidation technology used all through the mining industry, particularly through the refractory gold space. It's a proven technology been used in the industry since the 1960s. The other technology is solvent extraction, which everyone is probably aware of, has also been used all through the base metals industry since the 1960s. So there's nothing novel about this flow sheet, and we've done that on purpose. Our partners in Korea, they don't want anything that hasn't been done before, so that's why we chose this flow sheet. And they'll also bring the expertise to convert it into those downstream products. So working very closely with those downstream partners to convert that all the way through to the NCM 811 precursor product. So just in summary on what that means is we can buy nickel concentrate from our mine, we can buy our nickel concentrate from third-party feed providers, and any nickel explorer that builds a mine in Australia, we'll be talking to them because we can buy nickel for in the order of 70 to 80%, convert it into the NCM 811 product. That trades at a 120, 140% payability or a 20 to 40% premium to the nickel metal price. So we're effectively doubling the value of the nickel by combining it with in the chemical ratio of NCM 811. By combining it with the cobalt and the manganese, it trades at a significant premium to nickel metal. And that's what's driving some very strong economics in our downstream business. You can see here that premium has traded as high as 60% in the past. At today's prices, it's around 30% above the current nickel price. So if we use the base case, which is a 20% premium, we're seeing a $2 billion NPV on our downstream business, and that's in the US dollar terms. So you can see there, we're looking at around 43,000 tonnes per annum of nickel into that precursor product. Very strong return on investment, low capital for the downstream business of $491 million. These are numbers that are not scary to our partners in Korea. These are companies that we're talking to that are investing billions in the order of $10 billion each. And so they look at our capital and they say that's no problem. And so we're very focused on bringing those funding partners, de-risking this from a funding and technical perspective through our pilot plant phase and unlocking that $2 billion NPV. So currently trading at 0.1 times NPV for any analysts out there. So that means when we build this, that's a 10-bagger. It's pretty simple, 0.1 to going to 1 times. A big year ahead. Upstream PFS is due any day or any week. Pilot plant testing ongoing. We've got the pilot plant in ALS in Perth, and we're going to build a large-scale pilot plant in Vietnam. We're looking to invest $50 million into the pilot plant, and we'll work with our partners through that process. We'll finalise those partnerships over the next 6 months. We'll then start working with our third-party feed providers, and final investment decision towards the end of the year, and then we're into that build phase. and building it as quickly as we can so that we don't lose any more market cap. So thanks everybody.